This is Matthew Cratter from Trade University, and today I want to talk about how KYC can ruin your life. And this is with relation to Bitcoin. A lot of people still don't know what KYC is. It stands for Know Your Customer or Know Your Client. And it's basically this process. It occurs in most developed countries. What I'm going to be talking about is what occurs in the US. When you open up a brokerage account or stock trading account, a crypto account, whether it's Gemini or Kraken or Coinbase or BlockFi or PayPal or Cash App, you need to provide personal information. The brokerage or the bank has a legal obligation to know their customer. And knowing their customer means knowing this personal information: your name, your home address, your date of birth, social security number, driver's license, or passport. And these exchanges have begun to also include stuff like a recent selfie as well. These requirements may depend on what country you're living in, but these are the basics of KYC. They actually come out of the fallout from the September 11th attacks, which led directly to the Patriot Act. And part of the Patriot Act was this requirement to make KYC mandatory for all U.S. banks, and then subsequently for banks and brokerage accounts. So this is the history of it. And on the surface, KYC doesn't seem like a very dangerous thing. It actually seems quite reasonable. It's trying to stop money laundering. It's trying to stop the funding of terrorism. And you may ask, if you're a law-abiding citizen, why would you care? You've got nothing to hide. But this is where the paradox of KYC comes in. KYC pretends to try to protect you, and the original intentions of it may have been more on the front of surveillance, but let's just take it at face value. KYC pretends to try to protect you, but it actually ends up making you more vulnerable. And this is how it does it. Centralized databases that are the result of data collection from KYC, these databases are full of personal information. And as such, these very large databases of personal information are extremely attractive targets for hackers. And the way it works is this: it's not worth it to try to steal one person's personal data unless maybe they're a billionaire or something like that. But it is quite worthwhile to try to steal a database, a large database of lots of people's data, because that way, if you're not able to hack into one person's account, chances are you'll be able to hack into another person's account, and it will make the cost of acquiring the data worth it. The problem with this, of course, is that corporations, banks, government agencies, the kind of groups that do KYC and collect this personalized personal information, they actually have a terrible track record of protecting this data. We saw this with Target starting in 2013. This is really the beginning of the modern era in very large data hacks. And we've had many data hacks since then. Let me just pause here and say, if you're enjoying this video so far, be sure to hit that subscribe and like button, especially if you want a lot more information about stock trading, accumulating Bitcoin, and making yourself more independent, not just from a wealth perspective, but also from a self-sovereign perspective of someone who cannot be canceled, who cannot be deplatformed. This is really what I've become very interested in this channel. So these groups that are required to collect your personal data have a very bad track record of protecting that data. And now we're seeing that this is true in the cryptocurrency space as well, in the Bitcoin space as well. BlockFi last year was hacked. A hacker used a SIM swap to access an employee's phone, and then to get it to hack into the database of personal information and collect people's names and addresses, and presumably the amount of Bitcoin they were holding with BlockFi. This is absolutely appalling. And what this means is, if you are a customer of BlockFi and you are one of the people whose information was hacked, now criminals know your name. They know what you look like if you uploaded a selfie or driver's license photo. They know your home address. And they also know how much Bitcoin you own, at least how much Bitcoin you held at that point on BlockFi. Now, this is a huge security risk for individuals. And this is why I want to argue that KYC does not actually stop criminals. It actually makes things much easier for them, because now, instead of having to attack you at your house or do a one-on-one attack, they can just go right to the dark web and buy large amounts of personal KYC data and then use that to hack you online, or maybe to show up at your house as well, and try to get your Bitcoin from you. This is a problem not just for crypto accounts, but also for traditional stock accounts. Robinhood, it looks like, has the highest, their login data and their personal data of their customers has the highest, is fetching the highest prices on the dark web, which suggests that Robinhood is a very insecure system, which is one reason I stopped using them. But this is also a problem for all the major cryptocurrency exchanges, Coinbase, Kraken, really any of these. This information is now showing up for sale on the dark web. And so paradoxically, KYC is making all of us less secure rather than more secure. So this really is the biggest problem with buying your Bitcoin using Coinbase or any other KYC service. And again, especially if you're in the US, really any service you use to buy Bitcoin. If you don't have to provide your KYC information up front, when you try to withdraw your Bitcoin or sell it, often at that point, I believe this is how Cash App does it, you'll have to provide this data. So they make it very easy to onboard you. But then when you actually want to sell your Bitcoin or withdraw it and hold it on a hardware wallet, then you get KYC'd. So I've been recommending Coinbase Pro on this channel for many years. That's how I started buying Bitcoin in 2019. Again, I haven't been paid by any of these groups. This is just who I was using personally. I have never been a huge fan of Coinbase or the way they've conducted themselves. They've been really against the whole Bitcoin ethos for many years. And Brian Armstrong has basically created a casino of altcoins there. And he's done it to enrich himself, and has not. It's not been a good thing for Bitcoin. And so then I transitioned and started using the Strike app instead. The problem with the Strike app is it seems to have lower limits. You can keep calling them every week like I do and having them raise your purchasing limits. But if you still want to buy large amounts of Bitcoin, Coinbase or Kraken or Gemini are probably still better bets. So I continue to buy Bitcoin using these services, but unfortunately all of them do require KYC. Now, if you followed along with me buying Bitcoin over the last couple years, your wealth has massively increased, but there has been this vulnerability. It's not just a vulnerability for Bitcoin, it's a vulnerability if you have any stock trading account, if you have an account even with groups like Fidelity or Schwab or TD Ameritrade. But I have to admit that I did make a big mistake by not focusing on non-KYC Bitcoin. It didn't really seem to be an issue for me at the beginning. I also wanted to buy large amounts of Bitcoin, which is very difficult to do in a non-KYC manner. But the more and more, the more we see the world evolve, especially what happened in 2020 and the increasing government encroachment that we're seeing in 2021, it's really driven my attention to non-KYC Bitcoin. Now, the problems with buying non-KYC Bitcoin, which is anonymous Bitcoin, you don't have to provide your personal information in order to purchase it. It's a lot less convenient to buy non-KYC Bitcoin. Also, you'll usually need to pay a higher price than you would pay on a regulated exchange like a Gemini or Kraken or Coinbase or Strike. Also, it's quite difficult, as I said, to buy large amounts at one time. You sort of have to piece in the position, hundreds of dollars or thousands or $10,000s of dollars at a time. So depending how much money you have to allocate to Bitcoin, these are all the problems with non-KYC Bitcoin. Now, as I said, Bitcoin is a teacher. And one of the things that Bitcoin has really been teaching me as I've gone down the rabbit hole over the last couple of years is that privacy is much, much more important than I ever thought it was. I always thought it was fairly important. Of course, there's the irony of me having a YouTube channel in which I'm publicly proclaiming that I'm a Bitcoiner. We'll leave that to the side for now. I do believe that it's better for most people not to talk about that they own Bitcoin, but I think it's also important to have people who are willing to take on the personal risk to introduce other people to Bitcoin. So this is the trade-off you make if you have a YouTube channel where you talk a lot about Bitcoin, as I have been doing. So as I've gone down the Bitcoin rabbit hole, I've really begun to focus more and more on open source software, on decentralized services, on the importance of not being able to be canceled or deplatformed by anyone, including social media companies and big tech. And I want to emphasize this when I'm talking about non-KYC Bitcoin and trying to route around the existing system. This is not about trying to do illegal things. It's not about tax evasion. So if you live in the US, which is what I know best, and you buy KYC Bitcoin or non-KYC Bitcoin, you're still required to pay capital gains taxes if you sell your Bitcoin for a profit. So again, non-KYC Bitcoin is not about tax evasion. Though I would add parenthetically here that if you never sell your Bitcoin, if you live long enough or your descendants live long enough to out-hodl the IRS and the US government and Bitcoin becomes a global reserve asset and a global currency, maybe you never need to pay taxes on your Bitcoin. Though currently, if you do trade your Bitcoin for fiat at a profit, at least in the US, you definitely owe taxes. And if you bought your Bitcoin using any of these KYC exchanges, the US government and the IRS know that you own Bitcoin. You can put it through a coin mixer or coin join and preserve that sort of privacy. But the government still knows that you own Bitcoin because Coinbase and Gemini and Kraken and Strike report this information to the IRS, and who knows who they share it with. So this is not about tax evasion. This is not about breaking any laws. It's just a way of thinking about how we can increase our personal privacy. One way to avoid paying taxes on your Bitcoin is, again, never to sell it. And as long as there's not an unrealized capital gains tax on it, you can just borrow against your Bitcoin and avoid paying taxes legally in that way. And what you do is you borrow against your Bitcoin. You maybe sell a tiny bit of Bitcoin to pay the interest on that loan. I go into this in detail in this 24-minute video on Bitcoin loans, the ultimate guide. I think it's still a little bit early to borrow against Bitcoin. The interest rates are still fairly high, 9 or 10%. And Bitcoin has a long way to go in terms of appreciation. I think we'll be at 200K by the end of the year. So I think it's a little bit too early to borrow against Bitcoin. I probably would not do this until Bitcoin hits $1 or $2 million per Bitcoin. But it's important to start thinking about this and to realize that you will not need to ever sell your Bitcoin, and you'll still be able to live off of it by borrowing against it. So check out this video, The Ultimate Guide to Bitcoin Loans, which I'll link to below. In terms of buying non-KYC Bitcoin, again, I can't emphasize this enough. It's not about tax evasion or doing illegal things. This is about fundamental human rights, the right to privacy, the right to have freedom from global surveillance by governments and criminals. And there's a huge Venn diagram overlap, of course, between governments and criminals. So how exactly do you buy non-KYC, completely anonymous Bitcoin? Again, this may or may not be legal in your jurisdiction. I've done some research on it. I'm not a lawyer. I should emphasize that. But I do believe it's legal in all 50 U.S. states. I'm not sure about Australia and Canada and Europe. You have to do your own research, consult a legal professional or a tax professional. None of this is legal advice, tax advice, or investment advice in this video. That goes without saying. And it also goes without saying that this is a very sensitive area for obvious reasons. I'm not advocating for anyone to break the law, and I can't emphasize that enough. And this is one reason why I'm not going to post this process for buying non-KYC Bitcoin publicly. I do cover it in 4 recent lectures that I just made, How to Buy Bitcoin Anonymously, parts 1 through 4. I'm going to be adding a few more parts in the next couple of days. This is part of my Ultimate Guide to Bitcoin course. Before you buy something like this, you should watch all my free material on YouTube. I have hundreds of videos on Bitcoin. Familiarize yourself with the rabbit hole. Then maybe check out my Amazon books, which are very cheap, $2.99 for the Kindle versions in the US. And once you've exhausted this very low cost to free Bitcoin education, at that point, consider checking out a paid course like the Ultimate Guide to Bitcoin. When you join Trader University Premium, you'll get access to this course as well as all of my other courses. They're mostly trading courses. I cover momentum stocks, trading options, trading futures. I also have a list of my favorite long-term investments and my favorite current momentum stocks. So you get access to all of this as a Trader University member. I'll stick a link in the description notes below. You can check out the list of lectures here for the Ultimate Guide to Bitcoin. You can click through to this page and you can click on any of these boxes and they'll give you the list of lectures for that particular course. Again, everything's included for one fixed price. If this is something that interests you, you can scroll all the way down, click right here where it says Get It Now, and that will open up the checkout page. Now, normally access to everything, including the guide to how to buy Bitcoin anonymously and without KYC, normally access is just $125 for every 30 days. You get access to every course, including my list of long-term investments. But because you've listened all the way to the end here, I want to give you a special coupon code. You can click down here and type in YT, as in YouTube 99. Click Update, and that'll take $26 off the price. So you'll get access to everything for just $99 for 30 days. You can watch all the courses, cancel before 30 days, and you won't be charged again. There are no long-term contracts or anything. So you can come to Trader University, check it out for a month or two, leave, come back in 6 months or a year, and check it out again. I'm trying to make this as affordable as possible for as many people as possible. So check that out if that's something that's interesting to you and you really want to take your trading or your Bitcoin education to the next level. But again, follow all my free videos on YouTube first. There's hundreds of hours of material there that's available to you absolutely free. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.